Hey, what's going on, guys? Welcome back to Modern Options. Today I want to talk about a new strategy within the 0DTE line that I've been trying out recently, and some of you may have heard of it. It's the SPX 0DTE Iron Butterfly. So this is a little bit different from a credit spread or an iron condor. Instead of selling an out-of-the-money strike or two out-of-the-money strikes to make an iron condor, you're actually going to be selling two at-the-money strikes and then profit from time decay or a drop in implied volatility. Granted that SPX will remain range bound within the time that you are in the trade. This type of strategy is going to work best on a range bound day, and it will not work within a trending market because you will be stopped out very shortly and won't make any money. You might have seen the term called a Jim Olson Iron Fly or a JOIF. A lot of people use this, and his strategy is that he opens it within minutes of the open, typically does it about 50 strikes wide, meaning that the two short strikes, you add 50 and take 50, and that's where your call and your put, your long call and your long put are going to be. So you take in a bunch of credit up front, and then immediately after you open that, you have to set in a buy to close for profit, and the typical number that's accepted by a lot of 0DTE traders is $150 worth of profit. Obviously you can make that smaller or larger as you please, but I do it a little bit different than the JOIF way. So I did 3 trades that I'm going to talk about in this video, and 2 of them were winners and 1 of them were losers. So quickly, I'll show you what a risk graph looks like for an Iron Butterfly, where at max profit, this is where your 2 at-the-money strikes are, the put and the call that you sold here. And down here at the max loss, these are where your long strikes are for the call side and the put side. You get the break-even number by taking the short strike for both the call and the put, they're both the same exact one, and then either add or subtract that number, and that's where your break even will be. I'll show you a little bit in my examples in the video. I also created a tracker showing my overall profit and loss for this specific strategy so far, and I'm up almost $300, so I'm still learning the ropes, and I'm trying to see which time of day versus how long I should try to be in the trade, as well as the width of the trade that works better. So far, I'm noticing the wider the width, the better, but we'll get into that. I started these about 22 September all the way up until this past Friday on the 22nd, and I've had some good wins, but also some not so bad losses. That's one of the great things about this trade, is that you won't get a loss very fast, so long as you stick to your rules and accept the stop loss. So let's go ahead and go into Thinkorswim, and we'll show you my first trade from 22 October. So for those of you that have seen my videos before, you should see another different color in here, which is yellow, which I haven't used previously. I'll explain what they mean. So today was a 0DTE Iron Butterfly. The light blue is my short strike for both the call and the put. The red is my long strikes for both. So the put is down here and the call is up here. The yellow are my break-even prices. And again, you get that by either adding or subtracting the premium that you received to your short strike. So on the 22nd of October, I entered this one later in the day to test out how it could be towards the end of the day, when really gamma is going to be moving it a whole lot and not a whole lot of theta. So I noticed that there was a little bit of an uptrend at the beginning, super downtrend, and then came right back to about 45, and then remained range bound for there for a little while. So I decided, why not? I will give it a shot to see if it continues this trend. That's assuming, previous performance doesn't guarantee future results, but it was showing a trend and I wanted to take the risk. I opened this trade at about 3:18, so just about 40 minutes till close, and I opened it on the 45 strike. That means I sold a 45 call and I sold a 45 put. I only made this one 10 wide just to see, because it wasn't going too much outside of that range. So minus 10, 45.35 on the put side and 45.55 on the call side. I took in $550 in credit, which means that I would at most have $450 max risk, because that's the width of the spread. $10 minus your premium received equals $450. So you can see that it was range bound during this time. I'm just going to go ahead and zoom in on the last hour of the day and show you these 1-minute charts. So I opened right here at 5:18, and immediately I know that if it breaches any of these strikes, it's very risky because it's at the end of the day and power hour can move very quickly. I would immediately sell my order no matter what the price is at. The great thing about this strategy though is that even if it goes to there, you will not have as big of a loss as you think, because the opposite vertical spread is going to offset your losses. So if it had gone beyond this, I wouldn't have lost that much money. So it continued to remain range bound, which was great for me. I let it go all the way until 3 minutes until expiration. And it didn't even actually touch my actual break-even prices, which was very nice. It meant that I didn't actually have to stop out of my position and close early, whether it's for profit or not, but it was remaining very close to it. And I mean, it's kind of risky holding it this close to close, but even around this point, I think I was up about $100. I set a stop loss, so that way I would just be at break even right here. So that way, no matter what, even if it went outside of here, I wouldn't lose any money. And then from there, I noticed that it wasn't even going back down. All of the theta/gamma that I received in profits was staying at least above 100. So it kept going, and I didn't want to let it go all the way to expiration because I didn't know what could have happened. But I ended up putting a buy to close order at $2.50, which would have netted me 300 bucks. Since it was remaining right here, literally on the money, it ended up closing 3 minutes till close, and I made 300 bucks within 40 minutes, and that was awesome. Like, I'd really love this trade for that. You can make quick profit within a day, but again, like all 0DTE strategies, you have to respect your stop losses and don't be hopeful. I've done it too many times, even after I've made videos about respecting stop losses, and I've broken my own rules. Nobody's perfect, but hey, we're all trying to make money. So I ended up closing 3 minutes before, profited 300. That's my best 0DTE trade so far. So let's go back and I'll show you one of my losers. And this was on the 20th of October. I waited my typical rule, unlike the Jim Olson, where I would wait 30 minutes at least before entering. And I opened this just before 30 minutes, so 9:58. And I didn't think it was going to trend higher. I thought that this little trend down would have continued or stabilized. So I opened this on the 20th of October. It was a 15 wide Iron Fly this time, but I took in $9.45 worth of credit. And if left to go to max loss, that meant that I have $555 max at risk. So you can see my long strikes right here with my short strike in the middle. My break even prices were 45.39 and 45 and 45.20, 55. So I took in 945 of credit, and then I ended up getting stopped out not even, how long was this? 37 minutes later, and it went above my break even price. I didn't want to risk that the rest of the day it would have continued to trend up and put me at a max loss. But if we go back to my tracker on the 20th of October, I actually only lost 74 bucks that day. So it really wasn't that bad for it actually hitting my break-even price while it was still so early in the day. And that's one thing I like about this strategy. You can put significant risk on the table, but if you manage it properly, you'll come out on top. And I would have actually made money because it remained within my break-even price, closed somewhere around 45.36, and I could have made, about 300 bucks on this, but that's not a risk I want to take. I don't want to leave an Iron Butterfly stay on the table for the whole time. So we have one winner and one loser so far. One I opened at the end of the day, one I opened at the beginning of the day. I got one more to show you, and it's another one that I opened at the beginning of the day, but this one was actually a winner. So this one was on the 15th of October. This one was another 15 wide Iron Butterfly, short strike being 44.70, and the longs were 45.55, 44.55, and 44.85. I took in $10 worth of credit, which means that at most, if I let it to go to max loss, it would have been $500 at risk. My break-even prices, you just add the 10 and subtract the 10, so 44.80 and 44.60, and I opened this one at 10.13. I was totally in this trade for about 2 hours and 5 minutes, and it started to trend up a little bit and a bit of a downtrend. I wanted to open up and see. There was a slight uptrend, but the RSI was starting to dip down a little bit, and it might have stayed range bound within the rest of the day. So I opened this up at 10.13, and you can see right away it did touch my short strike right here. And I kind of broke my own rule by not selling right away, but it was only down for 1 minute. I think I was just going to let it sit for, if it was more than like maybe 2 or 3 minutes, then I was going to close out of the trade. But luckily for me, it rose right back above my break-even price and didn't go back there for the rest of the day. So I continued to hold, and it started to expire quickly after that, and I was in the profit zone at this point. It went down and tested my break-even price again, but this time didn't go below it. and then again had a little rise back up. At this point, I saw that it might keep testing my break-even price throughout the day, and I did not want to lose any of the profits that I had. So on this day, I took in an actual $150 win. So I closed it at 840. So, you know, counting for fees and commissions and such, I profited 150 bucks on the day. So I put in that buy to close order at 840, and it filled right here at 1218. So far I've done trades in the beginning of the day, I've done one at the end of the day, and I don't have complete data on which way that I might like to do. It's just going to depend on what the market gives me. So this day, if I had held it all the way to expiration, it would have actually came out very profitable. It closed just above 44.70, and I would have made like $900. But again, I didn't want to risk it going to the break-even price and losing money. So the name of the game is to respect your stop loss and just take profits when you can so you can continue to trade. I'm going to continue to do this trade for a little while because I like the risk to reward ratio. You can actually profit a lot more than like an iron condor or a vertical spread, but the conditions have to be set and have to be right. If you've stuck around this long in the video, I appreciate your guys' time. It means a lot to a small YouTuber. If any of this information was useful for you, I would appreciate it if you give this video a like and comment down below if you've traded 0DTE SPX on Iron Butterfly and how has it worked out for you. All right, guys, I'll catch you in the next one. If any of this was helpful for you guys, and if any of this information was useful to you, add a like. Idiot. If any of this information was useful for you, that sucks.